Hello and welcome to the channel Economic Now. Thank you for joining me as we dive into an issue that impacts not only our wallets but also the global economy: the rapid decline of the US dollar. Today I want to explore why we're witnessing what many describe as a historic downturn for the greenback, how it affects our day-to-day lives, and what the broader global implications might be. To set the stage, we must understand that the value of the dollar is not just a number on a screen. It is a barometer of economic confidence, a key pillar in international trade, and a signal to investors around the world. When the dollar falls, it sends ripples far beyond our borders. Causes behind the decline. Let's first address the reasons behind the dollar's slide. Several interconnected factors are fueling this downward trend: monetary policy and interest rates. The Federal Reserve's response to economic conditions, particularly through interest rates and quantitative easing, plays a central role. Historically, lower interest rates tend to lessen the dollar's appeal to foreign investors. When investors search for higher returns, they might pull funds away from dollar-denominated assets, thereby weakening the currency further. Inflation and economic uncertainty. Rising inflation erodes the purchasing power of the dollar. In recent times, inflation has been a significant concern, with prices increasing not only at home, but also in global markets. When inflation outpaces wage growth, consumer confidence and investor sentiment can falter, leading to a less attractive currency. Federal debt and fiscal policy. Another critical factor is the significant level of federal debt. High levels of borrowing can signal fiscal imbalances, undermining the perception of long-term stability. Foreign investors are less willing to hold on to a currency if they fear that massive debt levels will eventually force radical changes, such as higher taxes or even a default. Global shifts and alternative currencies. In an ever more interconnected world, the US dollar has long reigned as the global reserve currency. However, nations are beginning to diversify their reserves, with emerging economies and even some traditional powers looking to alternative currencies or basket arrangements to mitigate risk. The monopoly of the US dollar is being challenged. Each of these elements contributes to a narrative of uncertainty, a narrative that reverberates through financial markets across the world. The immediate impact. So, what does a falling dollar mean for you and me? Consumer prices and import costs. As the dollar loses value, the cost of imported goods rises. Think about your daily coffee or that smartphone assembled overseas. Prices can edge upward, gradually squeezing your budget. This phenomenon can escalate into broader inflationary pressures, impacting not just luxury or non-essential items but everyday necessities as well. Travel and international transactions. For those who travel or purchase goods from abroad, a weak dollar means spending more to acquire the same products or services that you once could get at a lower cost. International students, expatriates, or businesses dealing with overseas partners feel this pressure immediately, as exchange rate fluctuations make budgeting and long-term planning uncertain. Investor confidence and capital flows. A receding dollar can trigger a negative feedback loop. As the currency declines, investors start pulling out their money, and the stock market may experience volatility in response. This reluctance to invest in a depreciating asset can further drive down the dollar's value, creating an environment where uncertainty breeds further uncertainty. Global markets and trade imbalances. The repercussions aren't confined to the United States. Global commodities such as oil and food are often priced in dollars. A falling dollar might temporarily lower these prices for some economies, but at the same time, global trade imbalances and geopolitical tensions can complicate these effects. Nations that hold significant reserves in dollars may be forced to reconsider their strategies if the currency's trajectory continues downward. In essence, while a declining dollar might seem to offer some benefits to exporters, the broader economic landscape, marked by inflation, rising costs of living, and diminishing investor trust, suggests that the downsides far outweigh the occasional upswing. The broader global implications. The fall of the dollar is not an isolated domestic event. It has sweeping ramifications for the global economy. Shifts in global power dynamics. The US dollar has symbolized economic strength and stability for decades, serving as the backbone for international finance. However, as the credibility of the greenback declines, we see a gradual shift in global power dynamics. Emerging markets and economic powerhouses, such as the European Union and China, have increased their influence by pushing alternative currencies into the spotlight. Restructuring of global trade. Countries and companies are revisiting their trade strategies. For instance, Nations might begin negotiating trade agreements that sideline the dollar in favor of local or more stable currencies. This could lead to the emergence of regional blocs that operate outside the traditional dollar-centric financial system, ultimately reshaping global trade routes. Investment in alternative assets. With the uncertainty around currency stability, investors are increasingly turning to alternative assets such as precious metals, cryptocurrencies, and real assets as a hedge against inflation and currency devaluation. This shift alters the landscape of traditional financial markets and could lead to long-term changes in investment behaviors worldwide. Economic nationalism and policy responses. Finally, the prospect of a weakened dollar can fuel economic nationalism. Governments may seek to implement policies designed to protect domestic industries and reduce reliance on foreign currencies. While these measures might provide temporary relief, they can also lead to trade conflicts and further isolation in the global market. While some of these changes are already taking shape, the full impact is still unfolding. The interconnected nature of modern economies means that a decline in one major currency doesn't occur in a vacuum. It reverberates across continents and alters economic policies globally. Conclusion. In conclusion, the saga of the falling dollar is a complex interplay of monetary policy, inflation, fiscal dynamics, and global realignments. It is a story of confidence, a trust that, once cracked, sends shockwaves through both domestic and international markets. As you have heard today, the dollar's decline is not simply an abstract economic statistic. It affects everyday decisions, the cost of groceries, the price of travel, and even the way we invest for the future. And while there are debates about the potential upsides, such as a boost for exporters, the overall picture is one of concern. Policymakers and economic leaders are faced with the monumental task of restoring confidence in the currency. For the average person, the key takeaway should be the importance of staying informed and adaptable in a constantly shifting economic landscape. Thank you for taking the time to listen. I hope this discussion provides clarity on why the dollar is falling and encourages you to think critically about its broader implications. As our global economy continues to evolve, our understanding of these shifts will be crucial to navigating an uncertain future. This concludes our in-depth look into the challenges facing the US dollar. Stay vigilant, keep questioning, and remain informed, because the state of our economy ultimately shapes the state of our lives. Thank you for watching, and please like and subscribe, and